move on. And now's when any comments on the minutes? I'd like the motion to approve. Motion to approve minutes.
Second.
All in favor? Aye. All right, approve the minutes. And at this point, the meat of the meeting. Let's go over our financials, please.
Thank you. Included in included in this evening's packet was February treasurer's report. We'll go over our normal highlights, general fund, water fund, and through the projections. We do have a rather in-depth CIP update, so I will make the treasurer's report rather brief. Can't see it right here. And then we will finish up with the investment portfolio discussion. So I will go through this really quickly, but please stop me if you have any questions. Starting with the general fund. Yeah, I really covered a property tax, we're in a good place. This a little bit over $2 million in February from the first installment bills that went out. This point of year, the property taxes are higher than last year by about $392,000 with 18.3% of budget. Just to give you a frame of reference, we are 16.7% for the year. So definitely in a good place, and we continue to see the property taxes come into March. On the sales tax front, this month's receipt was less than last year, less than what our monthly budget target was. Just as a reminder, this was from November sales. We're at about 14.8% of budget. No reason to be super concerned yet. It's still very early in the year, only February. However, if this trend continues, if we look at the projection spreadsheet, we are projecting that sales tax may come in at about $40,000 under budget. Again, it's only February, and that's if everything goes as planned for the rest of the year. So we'll continue to monitor that. As we're talking about sales taxes, one thing I wanted to mention, if you listened to or saw any of the coverage on the governor's budget proposal for this year, it did include the proposed elimination of grocery tax. It's difficult to predict what the exact impact would be because not everything at the grocery store is taxed at the same rate. And there are other establishments, a number of establishments in Glencoe that would be impacted by this. But our initial blush at a proposal is this could mean as much as a $200,000 per year reduction in revenue for Glencoe. So that is something significant that we are keeping an eye on. Bill and I are both on the Northwest Municipal Conference Legislative Committee. So far, we have not seen any bills that would allow us to implement a grocery tax locally. There doesn't seem to be a lot of traction for that. As you can imagine, not a super popular proposal to give us the authority to implement that locally.
Interestingly,
Interestingly, the governor seems to think that local government has the authority to do it already. He has said it several times. Statute does not accommodate it. Home rule units would likely have the ability to do so. That's something we'd have to look at. But either way, it seems like the governor thinks that we can do it anyway. And there have been no bills introduced that would provide the authority at the local level to impose. So we'll see where that goes. He's digging his heels in on it, though.
That is a significant impact that keep an eye on as the legislative sessions continue. Looking at general fund revenue as a whole, our places for eating tax continues to perform strong. Parking fees and E911 surcharges all came in higher than this time last year and the monthly budget. On the expenditure side, our year-to-date expenditures are higher than last year. They're about 14.9% of budget, so no areas of concern there. Moving on to the water fund, our volumetric revenue is higher than last year. We're at about 10% of budget, which is normal for this time of the year. Really not a lot of irrigation going on despite spring-like weather. Our revenue as a whole is about $28,000 over last year. That's largely due to phasing in the rate increases that were approved as part of the budget. Same story with fixed charge revenue, higher than last year, about 16.3% of budget, about $5,000 over this time last year. Our expenditures are higher than last year, but only at about 8.3% of budget, $125,000 of last year. Most of that is due to timing. So again, no reason for concern. And for the golf fund update, I will turn it over to Stella.
Well, we had two of our staff members go to some continuing education. Dave Arden attended a Golf Course Superintendents Association convention, and Matt Roddy attended the PTA show. Both very informative, learning a lot about industry trends, and they also received points for their certifications. I am happy to say we have a new instructor for our academy. Very lucky to have Matt Johnson, who has been working as Winnebago's general manager. And he has now retired from that position and is going to be a full-time instructor. So it's going to be very good for us. He has a nice following, obviously, from the area. And he actually worked at Glencoe in 2000, 2005. So he's kind of coming full circle back. And we did have some updates to our IT. We have a new credit card payment solution. This was kind of forced by our point of sale provider. Hopefully it will provide some lower costs. And we also migrated our server from locally hosted to a cloud-based service for more reliable, cost-effective solution. That's all that's happened in February.
Moving on to the remaining funds, not much activity in the debt service, motor fuel tax, and capital projects fund quite yet. All the expenditures are as expected with minimal activity at this point in February. Just a quick note on the debt service fund. On tonight's agenda is the bond reimbursement resolution that we did talk about last month. So that will allow us to recoup any expenses that are incurred for our stormwater project this spring when we receive bond proceeds. That bond sale is tentatively scheduled for May. If we can make it happen in that time frame, otherwise that would be pushed to June. We talked a little bit about the timing of the golf bond issue, and we notated this in the treasurer's report. We did adjust the financial projections, anticipating a bond issue for the golf course later this fall. That may be, as Phil mentioned, we may end up not borrowing until 2025 for that. So we'll kind of adjust if necessary, but we did adjust the projections for that. On the personnel side, full-time salaries and pension contributions have all increased as planned. We're actually seeing less in overtime at this point in the year as compared to last time, which is great. It's a direct reflection of our full-time placements. But we are seeing increases, nothing out of the ordinary, really anything that's expected with the collective bargaining agreements and what was the previous part. Moving on to the financial projections piece, when we look at just revenue in the general fund, it's projected to end the year with over 1.1 million over budget. There is a grant fund repeat in there of about $700,000. You might remember that from last year. That was part of the crib wall. We didn't get that until 2024, so that will be pushed back to 2023 through our year-end adjustments. So this is going to be another similar situation to last year where we will remove that to compare apples to apples year over year. So without that grant funding, we're trending about $400,000 over budget in general fund revenue. In the water fund revenues are doing well. We're trending about $189,000 over budget. When we add expenditures into that equation, the general fund is right on track with what we had budgeted to draw down 3.1 million. We will see that number change as bids come in for our capital projects. Actually, some tonight and some later this spring. The water fund is trending to draw down 1.7. The planned drawdown in the budget was 2 million. So again, we're really not that far off target from that standpoint, and that's what I would hope and expect in February. Fund reserves at month end, the general fund is trending at just shy of 62% of our operating budget. And the water fund is at 112. As you'll recall, we've been purposefully aggregating those fund reserves to spend those down for capital. On the inflationary side, CPI update for February was 3.2%. Commodities are running higher than last year, 24.5% of budget. I do think some of that is timing as we were wrapping up some expenditures from last year. And then contractual services are running higher than last year, only at 10.8%. Any questions on the treasurer's report? Okay, moving right along, I'm going to hand this over to Margaret so she can go over the CIP update.
Good evening. So tonight I'm going to give you a CIP update. I'm going to give you an update on our 2021 bond proceeds and where we stand with those. And then I'm going to pass it over to Director Sarna and Director Lawford for their presentations this evening. Director Sarna will have more detail based on my presentation, so we'll give you some more information there. In your packet, page 45, 46, and 47 have the quarterly and monthly update. So coming before the board this evening for approval will be the Green Bay Trail construction, sidewalk, and engineering from Cedar Lane to South Avenue. This will also include Sheridan Road sidewalk design engineering, and Director Sarna will be speaking more to that shortly. We also have the Village Hall second floor renovation, architecture and engineering services for the council chambers and public safety dormitory and locker room coming before you. The water main improvement design engineering, which will cover projects for calendar year 2024 through 26. And then the storm sewer South Green Bay Road construction and engineering, which has also a big portion of the presentation in a moment here. So we'll be available to answer any questions after we go through those more thoroughly. Moving to the next slide, we have our 2021 bond proceeds update. So we went and reviewed all the expenses that we have paid out of the capital projects fund using those 2021 bond proceeds. And so we bonded out for the $7 million, and then plus the interest that we earned on those bond money, and then the premium, we came in about 7.5 million. All of our expenditures to date for 21, 22, and 23 are about just over $7 million. And so that remaining amount is $505,000. Yeah, absolutely.
As the committee would remember, this is the first installment of the $10 million that was authorized in the 2021 referendum. That's out of the 7 that was issued, we were planning the additional 3 million was the bond issue that I was mentioning earlier. So we'll wrap that up this year.
Thank you. So the good news is we still have remaining funds of 510,000. To add to that, we have a DCEO stormwater grant that you have heard about before in the amount of $300,000. We expected to receive the funds in calendar year 23, and we actually had committed those funds through a board action item for street resurfacing. But then we did not end up spending all that money through that project, so we only dipped into the $300,000 revenue we expected by $52,000. So the good news is that we still have a remaining $248,000 to add to use this year, and we did not receive the actual funds in 23. We expect to receive them in 24. We've actually just recently got an update saying that we're going to get our more formal notice of award, which then should be followed by the actual payout of the grant funds to us. So including that dollar amount, and then we have some 2024 engineering costs that have rolled over from 2023. That would be $205,000 taken out of that. You end up with having a remaining balance to spend of the $548,000. A little bit more detail shown on the slide here of what is included in that $205,000 engineering costs. And then to show what we're spending the money on, we have additional projects outside of that larger project that Monica is going to speak to for the South Green Bay Road Drainage Project. We have exactly about $550,000 to spend on these additional projects. That includes Dell Place, sidewalks related to Dundee Road, which that'll come up in your presentation, streetlights and sanitary sewer upgrades. So we're coming in just right at the right amount of money to cover the project costs for those. So with that, I will turn that over to Monica and you can go right ahead.
I have three major updates this evening. The first I'm going to start with is on our water fund for our capital improvements for our water. The biggest update is that what we had scheduled for this year, Dundee Road Phase 1, and you can see it's kind of looks brown highlighted here in the upper corner. That we're actually going to push to calendar year 2025. When we started getting into the design conversations with our consultants, we just didn't think the schedule was going to make sense. Typically, you see more competitive bids for larger projects earlier in the year. So if we bid it at the end of the year, it would be a disadvantage to us. So we made the decision to push that back. We'll bid it out right at the beginning of 2025 to get those competitive bids. And instead, we're going to swap out for different projects. And the reason we can do that is we've taken a different approach this year. So instead of designing one project and building one project, we took an approach to bundle up 9 projects to design them all this year. We felt like with today's market, it allowed more flexibility to be more responsive to what our budget was, to make sure that we're getting work completed every year. So those 9 projects are highlighted in blue. Like I said, Dundee Phase 1 kind of looks brown at this point. That's getting pushed to next year. And then the 3 projects highlighted in green are what we're going to be doing this year, which is Holfelder, and then a north and a south segment of Skokie Bridge. So what that does for our budget, in calendar year 2024, we had anticipated $1.8 million for Dundee Phase 1. That'll get reduced down. We're looking at about 1.6 right now. That's still an estimate. And then moving into calendar year 2025, we'll have that projected 1.8 for the construction of Dundee Phase 1. Just to break down what we're looking at for this year, the costs for the bundled engineering design came in at about $245,000. Projected costs for those 3 smaller water main projects, we're looking at $900,000. We'll see where the bids come in. Those should be going out to bid at the end of May, and we'll be starting construction in July. We also are looking to add additional $200,000 to our lead service line replacement cost sharing program. What we are seeing is we had 23 applications roll over from last year to this year. That was about $190,000. We're about 2 applications away, 2 to 3, of all of the funds being allocated. Doesn't mean they've been spent yet, but it means if we process all of our applications, we would start telling people in April, you have to wait till next year. We feel like it's a little too early in the year to start doing that. So we want to replenish those funds of about $200,000. We're anticipating through our leak detection program, Phase 2 and 3 are going to come online in June. That's going to identify a lot more lead services that have leaks that need to have emergency replacement. So again, it's critical to have funds for those residents so that they can get those replaced.
Yep.
Yep.
Thank you. People that have already applied and been rolled over, and you're saying that aggregates about 190. And in addition, we're just about there for this year's allocation, which remind me was how much?
250.
250, okay. So if we add another 2, we come close to, do we think we'll take care of the backlog, or do we think we'll in fact still wind up with a backlog, but at least there'll be 24 waiting for 25?
My guess is the latter, that we will still end up with a backlog. But there's a lot of unknowns at this point. I think we've received 17 applications so far this year.
No, about 7 or 8.
7 or 8, I'm sorry, I was off. But you know, some people have applied and still haven't done the work. So it's a timing game of when those will get paid out, but
The only question I have is, given the dollars involved and what we're doing otherwise, if we increase the 2 to 250, would we be more likely to end the year with all of our residents happy that they've all collected everything we've promised them?
that's a good question. I started this debate with, am I gonna do replenish 150 or 200? And I went to 200, so it's a fair question, yeah, 200 to 250, where do we see? I thought 200, given the 190 rollover, I thought that 200 seemed like a good dollar value to replenish.
Well, I'm fine going with your recommendation. Feel free to reconsider that later in the year if the numbers are higher. If it wouldn't take a whole lot more, we can always
Revisit,
and.
thank you. Okay, no, that is good to
Sorry, to
know.
interrupt.
No, thank you, I appreciate.
Are the blue segments, are they year 3?
Blue segments are future, so if you're looking at all the segments combined, we have Dundee Phase 1, which is that nice brown color right now. And then the other major large project is Dundee Phase 2, which is the second half of Dundee. Those are our two largest, yes, those are our two largest projects. We wanted a mix in this 9 of small, medium, and large. So we're just gonna kind of have to see how it all plays out. We are only contracting bid-related services for the year that we will actually be doing, going out to bid for those projects. So they'll get up to near completion and design, and then we'll re-engage and finalize it.
Are these range just pretty old, or are there plenty of water breaks happening all the time?
Yes. and
Yes.
Yes, and yes. So we're targeting the ones that are the oldest or have the most breaks, the green ones first.
This area was somewhat strategically put together because of Dundee Phase 1 and 2. That's an upsizing. And a couple of them coming off of it are also upsizing. So we are increasing the pressure and the flow in certain areas. I would expect as we move forward and continue with the bundled approach, they won't be so centralized in one location. That just happened to be because of the upsizing.
Let me just add, one thing you're looking at is to make sure that we're not doing this water stuff and then ripping up the streets and conflicting.
And then our last big expenditure for 2024 is we have a 16-inch valve replacement project that is currently out to bid. That bid opening is next Friday. Projecting around $300,000. Any other questions on water?
So all in, that's between what we have, the bond proceeds that we anticipate, that we have authority in the spring, is that correct, or am I mixing and matching?
Mixing and matching.
Okay.
Because this is
Just
water
talking about
fund.
is water fund, the lead service lines cannot
Oh,
come from
300.
the bond proceeds, that has to come from fund reserve.
Okay,
So the 300,000 will come from stormwater, which is a general fund project.
okay. Only the new water mains and stuff that come from the, okay.
Correct. So the Dundee Road project. will come
So it'll be a
from bond
combination
proceeds.
of,
Not the 3 million.
right, the general.
The 3 million is not related to
Oh,
water.
sorry.
It's infrastructure, or that's
Sorry,
stormwater.
it's stormwater.
Yeah.
And that's.
Don't make that clear.
There's
Okay.
water in the name.
3 million and 300,000, got both say stormwater.
This is water you want to drink.
This is not
Yeah.
water you want.
Generally.
But
Okay, thank
I
you.
will say that's a good segue, because depending on what we see with the water main projects and where they come in, that may, and what we see trending with the engineering costs, that may accelerate our timeline for alternate revenue bonds. Because I don't think we were planning on issuing again until 2026. That may be something we have to revisit as part of the 10-year CIP compilation this year. When we start looking at next year's budget. For water bonds. Yes.
The water bonds.
And then another thing to point out, we are lumping together the Dundee sidewalk construction with Dundee Phase 1 construction. So that is a non-water fund of $200,000 that is getting pushed into next year.
This connection.
Right.
Unfortunately, we'll push it another year, but
Sorry, yeah.
to President Rowan's question before, we don't want to build something that we have to tear out.
Yes.
So,
Yeah, so that's getting incorporated. It's already been designed, but that design is getting pulled in to the water main design and then it'll all be put together.
Good.
And not to belabor the point, but just one last thing about bundling design, because one of the challenges in the past has been there's gonna be street resurfacing, then we did the research, we did the mains and the streets up to be done, like if the 9 projects are done, they're anticipating what may or may not happen with other things that would street resurfacing, for example.
So we are doing a street assessment, paving assessment this year. That's going to look at the condition of our roads. I don't think we'll start resurfacing our roads again until 2027. But with that, we are planning on doing some more master planning, layering all that data in GIS to see, okay, what are our road conditions? What are our water main conditions? And doing some better, long-term plannings with that. So yes, to that point, we are very aware. All right, the 2 other large updates. So South Green Bay Drainage Project, we are hoping to award that contract tonight, and I will be talking more about it at the regular meeting. That project, the award for the lowest bid came in at 3.4 million. That was great news. We had budgeted 3.4 million. We're also we have a partnership with MWRD where they're going to provide $1 million in funding. So total funding available at 4.4 million. And what we're looking at is with where the bid came in at, with the 5% contingency and then the construction engineering costs, the overall project cost is going to be 3.8 million. So I'll talk more in detail about that project later, but those are just the finances. And that's the 3 million bond. The last update is the CIT project for preliminary design engineering for the Green Bay Trail south of Hazel to South Avenue. This is where it currently is on the road. We want to try to move it off of the road. That engineering was also bundled with the Sheridan sidewalk extension. So that contract award is also on tonight's agenda with Christopher Burke Engineering. But what we did is we actually added some additional scope to that contract to look at a master plan for buckthorn removal along the Green Bay Trail and Railroad Corridor from the north to the south limits. So we're looking at existing noise levels, existing land usage, and looking at a recommended landscape replacement for buckthorn removal. So based on where it's at, if it's adjacent to a park or residential or a parking lot, that might change how we want to look at removal and replacement. And so it's that master planning overall that we're going to be adding. So that was originally budgeted for $60,000. These 3 scope items came together, coming in at about $120,000, and that's out of our general fund.
I mentioned the potential for grant with this as well.
Thank you. Yes. So these projects, Green Bay Trail and Sheridan Sidewalk, are great candidates for the Invest in Cook grant funding. So we will be applying for that. They do provide funding for engineering costs. And so we're doing the preliminary design this year. Next year we'll go into final design, and they do a 50% cost match. So what you'll see, what's in the agenda tonight is anticipating $100,000 in grant funding for an overall $200,000 spend to finish out final engineering. Any questions on either of those?
I just wanted to add, sorry, last night at our STF meeting, we spent quite a bit of time on how village can address buckthorn and all around. So I'm just trying to get it. I know we were doing something, but this is nice that it's coming to the forefront. It's a hot topic.
It is a very hot topic, and there are a lot of ideas going on.
Okay.
Yeah, everyone agrees on the removal. Then what?
Thank you, Monica. So for my portion to discuss the Community Investment Plan 1049,
which is the replacement of rescue squad pump to S30. In the interest of brevity, I'll try to power through my remaining 46 slides as soon as possible. Then we'll take a break and I'll grab up the last 62 slides. So for everyone's information, because everyone might not be aware, our current fleet is existing engine and a squad, E30 and squad 30. What is the difference between the two? They both have the capability of water and fire. But back at the envelope map, you can imagine a squad would be, say, 75% equipment rescue based with 25% the ability to move water, carries water to the fire, and then can't pump water with the reverse for engine. So why would we have two? Is in order for us to maintain a quality of service for our own municipality, but also to respond to mutual aid agreements, you need to have those both if one goes down, which does happen on occasion for service. Also, for the purpose of this discussion and this briefing, you're looking at two primary providers of these two vehicles. The two companies would be Pierce and E1, if you can imagine. We currently possess one of each. What is the difference? It's something akin to Ford versus Chevrolet. So now this has a significant amount of lead time and a lot of development in it. This does appear, if you look at the 10-year CIP, this appears as an expenditure for 1.1 million on the 2025 application. However, again, for the information we provide you, it's important to give you as much information now. Our current Squad 30 is manufactured by Pierce. As discussed, it functions both as a rescue vehicle and as a pumper vehicle. It's anticipated for these types of vehicles, you try to get about 15 years. So the vehicle we have now, we're replacing, we purchased in 2010. In developing this and looking and considering the world we live in now post-COVID, you have to really look at some significant wait time. And we'll discuss that in the next slide. But in looking and developing, we have to consider this vehicle that we will purchase has to last us to the year 2042. So when you start thinking in those terms. And we have to also consider, or attempting to consider as much as we possibly can as far as the trend and commitment that the village has made as far as trying to go to carbon neutral. So we have to look at those elements as well. Energy efficiency. Can you next slide, please? So up to date, what we've done up to this point is we formed a committee in 2024. And the first front of mind consideration was weighing the type of vehicle we want to purchase and manufacture. Should we consider Pierce versus E1? As I mentioned, we do have one of each. There is a history for both. The initial consideration was looking at all of our community partners. Quite frankly, the quality of vehicle for E1 is much better than Pierce. There's an unnamed, we'll say, a municipality that did recently accept delivery of a Pierce vehicle and has not taken the street because of a number of different technical issues. It just sort of happens. It's still kind of working the bugs out. So it was considered, and we should go in the direction of E1. How is the purchasing managed? The purchasing and the price is managed through collective bidding, performed by a national purchasing cooperative, Houston Galveston Area Council. They basically give any municipality that joins this cooperative then achieves the opportunity for the best price. E1, a bid was solicited through E1 or from E1 to the Ocala, Florida development plant. And we found that, as noted, it would take, as of right now, a 35-month window delivery. This is from a wide range of consideration and issues that we're experiencing everywhere across the board. This is the same issue we experienced with our own fleet purchasing the replacement vehicles, and also the elements of outfitting, that kind of thing. It's just across the board. Everyone's having a hard time finding personnel to work and finding material. How is this done locally? This is done through a local representative, FSI, who we've met with a number of different times. FSI performs as a single point of sales, service, and outfitting. So it makes it more convenient. And quite frankly, if we went with Pierce, you would have to arrange for your own separate purchasing and service agreements.
General contract.
Yes, sir. So now, for our own information, just again to kind of look at the range, in 2010, the purchase of Squad 30 was purchased for $426,000. 2015, Engine 30 for $503,000. Very similar vehicles, but you can see that an increase in price. The present build right now, if we would accept delivery for 2027, comes in at 1.2 million and some change. So there is a real increase in cost. And again, for all those same reasons that we talked about previously. Next slide. So to provide you with as much information as possible, we felt it was important, full transparency, to give you what the steps would be full. What you see here depicted is actually a pretty good mock-up of what the design process, what we would hope to purchase through FSI. From here, we would look to finalize those plans. We provided with a loose contract. That loose contract has that price, and we'd have determined payment options from the village. As it is right now, FSI offered us an opportunity if we paid an entire amount at once, put all that money up at once, to accept a vehicle in 35 months, they would offer us roughly an 11.5% discount in savings. Now, you have to consider, right? You have to consider as part of the build-out process some things that are common in the process itself. During the course of the actual manufacture, those individuals who are contracting that purchase, they will travel to the factory and always result in some sort of modification on the initial build. As they see in place that accounts for. This isn't really it's hard to grasp even in a 3D rendering. So that can account for an increase. It's a change or modification in technology, equipment, that sort of thing. That typically results in a 5% increase of that initial price. That's just kind of an accepted standard. So if you consider that 11.5% and you take away 5%, you're really at only 6.5% reduction in price. And you have to decide if the market holding them at least would be a better ability. In consideration also to try to keep the cost down. This 1.2 million expenditure is not a bumper to bumper brand new vehicle. We are actually looking to harvest material or equipment that still has lifetime in it off of the existing squad. So as part of the outfitting, we would marry the two, take what parts we put off of, put it on, and so on and so forth. There's some equipment, there's some communications radios, that sort of thing. It's perfectly serviceable. And also too, for consideration is the existing current squad, we would sell it used to another. So there could be some recovery funds from that. So too. So does anybody have any questions on the briefing? It's a lot of information, but there is significant.
So the 1.2 million. We would, if we're taking stuff out of our existing fire engine, it's tracked from 1.2.
No, so that's the 1.2. The 1.2 would be the vehicle itself, plus interesting items.
Okay.
There's additional outfitting
Right.
costs over and above.
We hope we can avoid most of it. Got it. Okay.
So bottom line then, sort of like maybe we should, instead of comparisons, we could start talking about Airbus versus Boeing, but more in the right dollar amount. Where are we in the process in terms of saying, okay, we know we need it, we need to commit, we need to sign a contract, although home rule delivery in 2027, but I guess that's their problem.
That's, yeah.
On the home rule list, it is on our list. Where are you and your team in deciding, yep, that's the one, let's put it in our order, let's get it going?
So we feel pretty comfortable with, we feel very comfortable with E1, the brand itself. Everyone is very satisfied with the design in itself. And we last meeting discussed some other modifications. And these are all minor things. And want to ensure, of course, it's not too heavy. Want to ensure it actually can fit in our building. So those things for consideration, and then check and double check those numbers. We've been provided, as I said, with a contract that has that price guarantee until the end of the month. But I can't say anybody's in a hurry. There's consideration also too that prices will increase. Again,
Any thought prices might go down as bottlenecks clear
you're
up?
not considering this is
Not
over
anticipated.
100%. This is over 100% increase from 15 years ago or 14 years ago. See what
We indicate that prices would go up in December.
There was some discussion, speculation largely, that prices They did just increase recently, and they said by December, there was I can't say a guarantee, but there's a strong suspicion by FSI that E1 would increase the prices.
I think what we'll try to evaluate, this is a little bit of preliminary information for all of you, just to give you a sense that something that we have in next year's budget is likely going to cost well more than we have budgeted and take a lot longer to actually take delivery of than we would hope. So what we're going to evaluate over the next month or so is we don't think that the prepayment option makes sense. Just given, if they were telling us 20-30% difference, that's a whole different animal, but given what they're telling us. But what we may need to do is move forward with a contract to get the build underway. And even though we know we're not going to expend those resources for 3+ years, just get in line essentially. So that's what we're going to work through in terms of determining the right timing to come back to you. And so this is just, it gives you a little bit of sense. This is going to impact all of our fire apparatus that's in the CIP, including the ambulance, which I believe is in 2027. Yes, okay. So, which is likewise seeing 100% increases over the life.
Can you explain why, Phil told me this, but it was really interesting. Why are you worried about the weight?
Well, historically, there's to make sure that the bay itself can support it. It's a large metal plate. I don't know why the large metal plate is reinforce.
We have a basement underneath our bays. That's unique. New fire stations, when they're built, are built on solid slabs to hold the weight of these vehicles because they're very heavy. And so our building has a unique problem which necessitated the custom build of our engine when we bought that in 2015 to not be too heavy. So because what we don't want is for it to fall through the floor and into the basement. That's generally not ideal when you're talking about a piece of equipment like this. So that's the process that Sean is referencing that will be very important for this piece of equipment too.
Yeah. So the discussion of reinforcing or if there's something we could do to fix that or remedy that. Best course of action is right now is leave it in place and it should be A-okay. Provided.
I can add just from a financing perspective, because I know there could be some sticker shock with the price, that we were planning, as Phil noted, in the 10-year CIP to replace this. We have historically paid cash for our vehicles at once. So this was planned as part of the general fund drawdown, albeit it will be higher than what we had anticipated. But we will also have an additional year to aggregate funds to pay for it. So that's why it's generally not a concern.
Probably 2 additional years to aggregate funds. Yeah.
I'm gonna be optimistic and say one. But that was part of the plan.
So when you guys are looking at weight limits, I'm assuming that involves every so often an engineer taking a look at what the actual physical condition of the building still is, as it's adding spring chicken even that we're in. And making sure that those estimates are all good and appropriate safety factors and all that good stuff.
A couple of questions I'd like to ask Sophie. You mentioned we need this vehicle to be around until 2042. I understand
And
that.
considering the 15-year life.
Oh,
it's
from
anticipated
the year
15-year
that we
life,
get it.
That's just to put everyone's mind.
Okay.
In everyone's mind that we have to, part of the build process, we have to really think.
15 years from the year.
27
to 42 is 15. Okay,
Yeah.
that's that part.
Yes, it is. I mean, the existing vehicle will be in service longer than 15 years because of the timeline.
And it doesn't represent a safety concern. It's just, again, we have to really plan it. It's because of such a long lead time that we found.
And you also mentioned this is an FSI, it's a general contractor. I'm sure there's a markup that we pay them, and are there any other players that we can consider to try to get other,
I'll have to get back to you on that, but I know the regional
they are the only
agents for.
people.
The salespeople.
They're the
Yeah.
only people in the.
Right, they contact E1, E1 does the build and the design, and they build the first part of the engine. It gets put on a train, shipped up here, and then the local installer is the one that finishes it, basically, through all the cabinetry.
There was more, somebody else you can ask.
Sadly, not too many.
Okay.
Session.
Yes. You have on our investment portfolio, so unless there's any other questions, we'll keep going. So I'd like to introduce Brian Hexel. Some of you have met him before. Brian is with PNA Financial. As you may recall, several years ago, the village had about $5 million in its fund reserves. Called idle cash. That we had available to invest that we did not need for day-to-day operations. We did hand that over to PMA, and as part of this arrangement, we do have Brian come to give periodic updates on how the investment portfolio is performing. And so I will hand it over to Brian.
All right, thank you very much, Nikki, and apologies for walking in a minute late. True story, there was a turkey walking down the tri-state. It slowed traffic pretty good. I later got up to a truck that I think he had escaped from. Interesting. Maybe it'll be on the news. No, it was shoulder. He was walking very nicely. That'd be a very startled turkey. Would anyone like a hard copy? I did bring a few. If I'm gonna talk and hand out at the same time since we're tight on time here. So Nikki did a nice job of introducing PMA. So I'm going to not do that. Slide up ahead, it talks about our investment process. We go ahead to the next one. Anyone else? Right. So I do think this is an important slide. We'll get to our returns here at the end of the project, at the end of the presentation. But we do have a process. We stick with it every single day. We believe in it strongly, and we believe that by sticking with that, we'll generate good, strong returns for our clients. I'm not going to read the slide because there's other stuff I want to talk about. We go ahead to the next. Real quick on the market. Obviously, you can go one more. Obviously, we had the Fed meeting yesterday. I put these slides together ahead of that meeting. It was pretty much as expected yesterday. If we kind of look back over the last 6 to 9 months here, during the third quarter, we had a Fed that was really putting out the word pretty strongly that they're going to keep rates higher for longer. We saw interest rates move up during that period. Then throughout the fourth quarter and ultimately leading to the December Fed meeting, they were talking about cutting interest rates. And 3 times, in fact, is what came out. And you saw it. Longer term interest rates move down and good returns for bonds. This year we've seen 2 inflation prints that are on a core basis anyways, continuing to trend down, but they both came in a little bit higher than expectations. That pushed rates back up and had people thinking, well, maybe the Fed's only going to tell us they're going to cut rates 2 times. Well, all that, they left it at 3, maybe 1 less cut out into 2025. So the market took that pretty positively. And I think the big picture here is that all of this is right. That I think the Fed is going to stay relatively higher for longer. You don't see any rates on this chart moving back into the 1 or 2% range for a long time. We're sitting here and, through the end of next year in the middle 3%, much higher interest rates. But at some point, they're going to start cutting interest rates. It does make sense. As inflation keeps coming down, this high level of rates is going to start putting some pressure on the economy at some point. We're not calling for a recession, but we think economic growth does slow down here at some point this year, giving the Fed some room. So if we look at the next slide, what I wanted to highlight here, and part of the reason we talk about this market outlook and update is that, a big driver of what happens in the Village's portfolio is an output of what the market did. We do a lot of good work on our side. We're picking high quality bonds. We're we have an active approach where appropriate. We have this disciplined process that absolutely does add value. But, if the market moves up, the market moves down in a big way, the portfolio in general is going to move in that same direction. So, last year was starting to look like a pretty lackluster year for bonds until November and December when those interest rates came down, as I mentioned, and we really saw bond prices go up. Both of those last two bars are around 5%. You take a lackluster year and put 5% returns at the end of it, you end up with a pretty good year. Now, that's the entire bond market, which is a longer term portfolio than what the village would have in place. So you didn't get 10% returns in the last 2 months, but we'll see that returns did jump up quite nicely. On the next slide, looking ahead, again, we do think that the Fed does start cutting at some point this year. Some volatility, this up and down that I'm talking about, always happens. Whenever the Fed changes direction, we went through a period of very sharp increases in interest rates. Now they're talking about cutting them. Everybody wants to know, when are they going to cut? How fast are they going to cut? When will they stop cutting? And the market's going to continue to adjust to that until we get some more data that clarifies that. So expect some more up and down throughout the course of the year. Ultimately, corporate balance sheets are in a really good spot. Corporate earnings came in pretty good for the fourth quarter. The consumer is in generally good spot. We are seeing a little bit of weakness, particularly at lower income levels. The high period of inflation here has definitely put some strain on that lower end consumer. But, in general, economy looking pretty good. And we think good returns ahead this year, whether you're, kind of in a cash type investment, overnight bank deposit, money market, whether you're in longer term bonds or stocks. It really does look like we're setting up for a good year ahead. So if we go ahead to the village's portfolio, taking a look, once again, really high quality portfolio, well diversified by sector, well diversified by individual security within the portfolio. So as you look across the sectors here, one thing I'll say is that we have been adding to treasury securities, spreads in general. We think about, you buy a treasury security, it's got an interest rate of, let's say, 5%. So then we look at these other sectors, we call them spread sectors, where they're looking to buy government agency securities or municipal securities or some really high quality corporates. Those should have a wider spread over treasuries. We've seen that spread tighten up quite a bit. And as a result of that, we're at a point in the cycle where, thinking economic growth could start to slow here. Good time to be buying treasuries, still really good yields, locking up, you see the different durations. The treasuries where we're adding longer term security. So what this is telling us is that for an average, the average portfolio, and really it's between 1 and 5 years, we have this treasury exposure earning a 4.5% type yield over the next 1 to 5 years, really locking in some good yields. We've not seen interest rates like this in the last 20 years, basically. So the ability to be now investing out, locking in some of these higher rates for the next 3, 4, 5 years really ought to be a benefit for the village. And I do want to highlight that these are, if we go and look at the next slide, actually, these investments are definitely laddered out. So there is liquidity being created within this portfolio. The securities themselves are also very highly liquid. So if some big project came up, suddenly and unexpectedly, these are funds that can be accessed. It's not like buying a CD where you have a prepayment penalty. There's market variation, so you don't want to be selling unexpectedly necessarily. We do good planning, stay in contact with Nikki and her staff to make sure that we've got a good plan in place that's going to benefit the village for years ahead. Taking a look at the next, once again, we are identifying. One of the things in that circle that I showed earlier was doing the research on the securities, but also thinking about returns across different sectors. I already kind of stole my own thunder earlier by talking about buying some more treasuries here lately. So if you look at the darker gray, you can see that has widened out. We're buying a little bit less municipal, less financials that would be in that corporate area. Just seeing those spreads tighten up. It's not that they're bad investments, and I'm sure we'll start buying those again, and having some of those treasury securities creates the opportunity to then move into a sector generating some additional spread if that if and when that makes sense in the future. So finally, that brings us to returns. Like I said, last year did wind up, this is a trailing 12-month return as of the end of February. We did see a little bit of movement down here this year. Cap rates were kind of moving up in January, March, put a little bit of downward pressure, but still over the last 12 months, 4.5% returns, beating our benchmark by whether you look at the trailing year, the trailing 3 years, or since inception, which was going back to 2019, getting by 40 to 45 basis points, that benchmark. So, versus just going out buying a portfolio of treasury and agency, we're still buying super high quality securities, but ones that offer just a little bit more yield. And plus with some good, and I say active management, we're not day trading, we're not buying and selling constantly, but we have seen a dramatic move up in interest rates over the last 2 years. So we have done a little bit more selling than we've done historically. Really wanted to make sure that we get some securities that are maybe getting to be less than 1 year to maturity, saying this is a really good time to sell those off. There's always a very good market to sell short-term securities. There's lots of buyers for those in the market, tend to get good prices. Get those invested back out long, get those 3, 4, 5-year investments going. Take advantage of these high yields, because once again, we do think the Fed starts cutting here and we see interest rates, not going back to 1 or 2%, but, back into maybe a 3 handle, a low 4s. That seems like that's in the not too distant future here. And then, on that, we just go through in the next several slides through the holdings. I mean, I can't say that there's a lot to highlight there. I'm not writing the transactional and trading history here. Had a couple of notes for myself here on, we have done, like I said, a little bit more buying and selling, all short-term securities that we're selling, some treasury. We did sell some treasuries, but more so was in the municipal and corporate space. And then we added primarily in treasuries, but then also added utility and a couple of corporate names. So, there's things we're doing around the edges in order to improve the portfolio, put it in a better position to do well in the years ahead here. And, I think that our results, speak well of how we performed and how we expect to perform to the village. So that does wrap up my remarks with a couple minutes to go here. So I did leave a couple minutes for any questions that you may have.
What are the quality constraints on the portfolio?
Under state statute, corporate securities are limited to A or better rated securities. The municipal actually would allow it down to triple B, but the reality is there's very few municipal securities that are less than AA minus. You might occasionally find an A+ rated municipal and would be deemed weak.
We're slightly under the benchmark on that. That I assume accounts for the yield difference.
Yeah, exactly. It is that spread product. So you have 2 of the 3 rating agencies, saying the U.S. government at this point is a AA+ rating. You bring in just a little bit of that corporate media exposure.
And our 3-year number is still negative.
It is.
This is an annihilated 2022.
Yeah, I mean, the move up in interest rates that I alluded to was extremely sharp. Really haven't seen anything like that since the, early to mid 80s. It was very rapid. It was kind of a generational sort of a move. And that's why we have done some repositioning in the portfolio to do well. Nobody wants to brag about negative numbers. I in the first
Being the benchmark.
that all the time. Our number was less negative, right? I know. It's, we're sticking with an approach. We know it's a good plan. And I think that with interest rates unlikely to go back to 1-2 type % here, I think that this strategy is really going to, start producing some nominal returns that look good in additional to the relative returns.
Questions for Brian? Thank you very much. Nice job in a abbreviated time frame.
Yes. Time now just right. Any other business? If not, can I get a motion? Okay. Please.
Second.
All those in favor? Aye. You're adjourned. Thank you all again very much for coming.